Good day, ladies and gents. I hope we are all good. I'm just here to do a quick part two of the part one video, which I just did of the midweek analysis. So if you are watching this video on the 9th of May or anywhere close to the 8th of May, it means you've got early access. And I'm just going to be showing you my exact entries based on the analysis which I showed you on part one. Some of the trades I took them, some of the trades I did not take them. So I won't really get much into multi-time frame analysis because everything has been explained on part one. So I'll just show you the H1, what we're anticipating, starting off with the US 30. We're anticipating price to pull back a little bit, take out the London lows, which is exactly what happened on the H1. So when we are looking for entries, what do we look for? The safest entries always happen when we get a close above the 13 EMA. This is based off BTMM trading strategy by Steve Mauro. So close above the 13 EMA, TDI should also confirm that it's now the price line has crossed the signal line and it's now bullish. And this cross here is just added confirmation. So my entry time frame after I confirm is always on the 3 minutes. And on the 3 minutes, I'm looking for 4 candles for my entries. I'm looking for pin bars. I'm looking for doji candles. I'm looking for, if I'm buying, I'm looking for bullish engulfing candles. If I'm selling, I'm looking for bearish engulfing candles. I'm looking for inside bars. If I get any of these 4 candles on or near the 13 EMA, that will be my signal for me to execute the trade with my stop loss either below my entry candle or below the last low if I'm buying. All right, so that M15 zone is right here. So soon as we get into the safe entry area, the first sign for us to sell is this pin bar here, followed by another pin bar here. Initially, if you want early entries, you can consider taking your trades on the first close back above the 13 EMA, confirmed by the 15-minute close. Anything above that is just scaling in and added profits. So safe entry, safe entry. You can also enter soon as the M15 closes. If you see any of the 4 candles, you can just use any of those candles for your entry and you can aim for 1:3 risk to reward ratio. Then going to Nasdaq, same thing. We were looking for price to take out the London lows, retrace either into the 50 EMA to give an ID 50 or retrace into the open price. So we retraced into the 50. We found support, dynamic support on the 50 EMA, which was also inside this point of interest, which you see right here. Jumping to M15, the safe entries is always the close above the 13 EMA. So sometimes the close might be a little bit far, but if you're able to understand the setup as it starts, for example, right here, we had a little W, lower low here, lower low here, lower low here, higher low here. So we had a divergence setup. We also had a shark fin hold the male type of setup. So if, as long as you understand what's going on, you can consider early entries in here, or you can just wait for your close above the 13 EMA for safe buys. So once you jump to M3, which is my entry time frame, again, I'm looking for any of those 4 candles. So like I said, your early entry can always be the first close above the 13 soon as you identify what's happening on your higher time frame. In this example, we had that divergence setup, and you can just take your entry here with your stop loss here. M15 closes right here. Soon as it closes, we get a pin bar. That's an entry. That's a stop loss. Then you also aim for 1:3, and your setup should be able to play after that. All right. So that's US 30. What else to explain here? Okay, TDI on the 3 minute, you can see we were running on a downtrend initially, which was also in a squeeze, this little downtrend, which you see here. Then after the squeeze, the bands, volatility bands started to open, broke out to the top side, showing a buy. So as soon as you confirm that you've got momentum, you can now start looking for any form of entry candles. Or if price is moving with retracements like this, then you can look for the 4 candles I mentioned on or near the 13 EMA. Then we're going to German 40. German 40, this was our point of interest based on the part 1 video. And this was point of interest number 2, but this was what our main zone. So if you see price came in here, bounced off this area the first time, and I marked that level as a point of interest. This little wick also took out the London lows. So that was also a valid liquidity sweep. Then we had some nice doji candles on the higher time frame, also finding support on this order block. Right. So again, M15 close above the 13. So here, the first close we had above the 13 was right here. Then price decided to come a little bit deeper again, then came back above and gave us a close slightly higher here. So let me just show you how you could have traded this. I think this, I actually shared this with the community as well. So we had 2 setups based off this initial buy and this retracement. I'll show this to you just now on TradingView. All right, so let's just mark this one as well. Okay, so when we come to M3, same thing, we are looking for the pattern. All right, so this is the pattern. Initially, I was looking at this as a buy. So I wasn't too sure here because I was still open to seeing price retrace down a little bit as well. So I was using a buy stop. So that buy stop did not trigger. Then my second entry was based off this order block on the bottom here with the stop loss outside this range. That's the entry which actually triggered. Then we started having the candles which I just mentioned. M15 close, our safe buy right here. Soon as that buy confirmed, we had a nice pin buy here with an inside buy as well before price pushed up. So you could have entered here with a safe buy, stop loss here, 1:3 risk to reward ratio, or you could have used this order block here with the setup which I'm going to show you now. Okay, German 40. Okay, this is actually an added setup, but it's based off that safe buy. So the initial setup, which I just removed, was based off this and this. I think it was looking something like this. 1:3. Yeah, I know it was slightly below this black line you see there. That was the setup. So as soon as it got violated, setup did not trigger. The second one then triggered. You can see it literally just pushed. And this was the safe buy, which has also pushed. I think it's almost on the TP. If you had to measure 1:3, it's almost there. So that was it for German 40. So the main thing you just want to focus on is your entries, your nameable candles, making sure you're waiting for safe entries. All right, gold, we marked yesterday's lows, we marked today's open price as a point of interest. That's where the price actually came, and we had 2 nice doji candles finding resistance on that zone. So jumping to M15, All right, M15, what did we have? M15 price was actually sideways for a while. So you see here, there were multiple entry points while its price was going sideways. But the safe sell only appeared slightly lower. Remember, if you're selling, you want a nice close below the 13 EMA to confirm your direction. So our safe sell only confirmed right here. All these here were early entries, just in anticipation of that drop, which we had analyzed on part one. So coming to the entries again, what you want to see if you're selling, you want to see pin bars, you want to see doji candles, you want to see bearish engulfing candles, and you want to see inside bars on or near the 13 EMA. So these vertical lines are representing 1 hour. And from here to here, it's also 1 hour. If I'm not mistaken, let me just, yeah, it's also 1 hour. So remember, I've put these lines to show you something. So this takes you all the way back to candlestick formation. Remember, open price creates a high, pushes down, then the candle starts being bearish. It sets the low, then it retraces a bit. So this will be a huge bearish candle. So from here, this is one H1 candle. So we have the open price pushes up, starts to create lower lows all the way up until here. So this candle on H1 is looking like this. It's a huge bearish candle like this. This is just to show you that the patterns which we look for, if you understand your top-down analysis, if you understand what type of trader you are, then it will become a little bit easier to look for the pattern within one or two candles and you call it a day. Can be H1, can be H4, can be the daily, depending with your trading style. So here you see that this was a doji candle, price going sideways before we got our acceleration to the downside. So initially we didn't know that it was a doji. So you could have started selling right here on the close of this bearish engulfing with your stop loss outside that range. So here price, you would have been lucky price did not take you out. But if the dealer opens their spread and take you out, and you see that the setup is still valid, you can still execute. If you missed that, remember the M15 safe sell was right here. After that, we got a nice pin bar followed by a nice bearish engulfing. So you can use this for entry, you can use this for entry. If you use this for entry, your stop loss above that pin bar. If you use this for entry, stop loss above the entry candle or above the pin bar as well. So that was the sell setup on gold, and price went sideways a bit during the PM session, then started to drop. So our analysis for the most part was on point. Euro USD, we were looking for a deeper retracement, slightly above this candle, I think, or this one. I'm not sure which one it was, but we were looking for a bit of a deeper retracement. And price did exactly that, although the retracement was not as high as I thought it would come, but the pattern was there. We had a nice little M. Price did not take out this level here. First safe sell here, second safe sell here. Those are the entry confirmations on M15. So if we just zoom in, all right, you see the closes below the 13 EMA. Those are our safe sell price points. Okay, so if we come to the 3 minute, there we go. So our safe sell was right here. Bearish engulfing, pin bar, dojis, bearish engulfing, pin bar. All these candles are entry points. So as long as you are happy with your buyers, soon as you see an entry candle on or near your 13 EMA, after it has been confirmed that it's a safe entry, then you can simply jump into your trade. Then Bitcoin did not retrace to our point of interest. So there was no trades at all on this one. I was just like marking it out, seeing possibly where I might have entered. Okay, let me just cross check. Oh, okay. This was our point of interest. Sorry about that. This was our point of interest, this order block. But what happened is price did not get into the area. We ended up getting two doji candles right on the 13 EMA, which was still a valid point of interest. So even though I did not actively execute here, if you were stalking this and you saw these two doji candles form, then that could have been a hint for you to actually now go to M15, confirm, close above the 13 EMA for safe buys, and then look for your entries on the 3 minutes. So remember, there's also nothing wrong with entering on M15. You can just put your stop loss outside the range or outside the last low if you are buying. So here you see the entries based off those safe entry points. So the first one was right here. So if you enter here, your stop loss is to go below this previous low because here there's no clean pin bar with a bigger wick standing outside by itself like this one, for example. Then your second safe buy would have been right here based off that pin bar. Then here we had a little imbalance, another pin bar, and price simply pushed up. So the entries were also going to be good for anyone stalking. Then US oil, we mentioned I didn't have anything immediate, but I was looking forward for price to come back into this POI for a potential push up or a potential sell. So we're still waiting to see what price does. But I think during the New York session, we actually bought based off this inside bar here being broken. So here you can trade a breakout. How to trade inside bars? You trade them using breakouts. Any price which breaks outside that inside bar, you can use it for your breakout entry. So if you were on M15, if you're waiting for a safe entry confirmation, you could have used, if you were trading right in our queues on time, this was the close above the 13. But if you were looking at it prior, you might have considered this. But remember, the inside bar was somewhere in here. So your entry would have started here. Then at the confirmation, you can still look to scale in. Price would have retraced to your entry, but still the trade would have been pretty much valid for anyone who was looking to take a buy coming back into that 4 hour zone. So on the 3 minute, just to take a quick look at it. Okay, there is an order block. That's our breakout entry buy. Any retracements, bullish engulfing here, inside bar here, this might have taken you out here, but as soon as you get a close above the 13, you can still use that as an entry with the stop loss below the entry candle, and you just try to aim for 1:2 or 1:3, or just aim for this TP, which was the 4 hour zone which we had. Then the pound is the only one which maybe I got a little bit off because I was strongly looking for this right here. I was looking for a reaction here for a continuation push up, but I think I most likely missed on something during my analysis, of which I did mention that if price comes and violates this low, then my buy will be invalid. Nothing triggered the entry here, so we did not take any trade on this, and the buy was invalid. So price looks like we are back below the psychological level. So going into tomorrow, we could get a liquidity sweep here and price might still come back in the range and close here, or price could actually do this and continue selling. Those are just possible plays going into tomorrow. So that's it in terms of my trading strategy. I use moving averages, which you see on my charts. That's your 13 EMA, which is the red one. Okay, I use the 13 EMA, which is the red. I use the 50 EMA, which is the aqua. I use 200 EMA, which is black. I use the 800 EMA, which is navy. Then I use my TDI on the bottom. This is all inspired by BTMM, a trading strategy by Steve Mauro. You can also check out his videos right here on YouTube, and you can also go through his course as well, because he goes into BTMM way more deeper and way more clearer than I do. I also use a few ICT concepts. You hear me speak of liquidity sweeps, SMT divergences, and stuff like that. Psychological levels, that's BTMM. So, and a little touch of my own trading style. So, if you want to learn with me, or if you just need mentorship, or if you need the 2025 day trading mastery course, do get in touch with me either on my WhatsApp or on Telegram, or you can just drop a message in the comments, a written DM, and I'll try to get in touch with you. If you follow the link on the description, it will take you straight to the WhatsApp community as well, whereby I will hit you up and you can let me know whether you want the free community, or whether you want the paid mentorship, or whether you want the 2025 day trading mastery course. You can just choose what you want and let's win together. So I hope you guys had a peaceful week. I hope you guys took some profits. For losses which you took, I hope those losses were lessons. Thank you so much if you watched this video, if you watched until the end. If you haven't yet subscribed, please do hit the subscribe button. Please comment what you trade, how you trade, what strategy you trade. If you took any trades this week, please do let us know. I'm also going to drop a video explaining all the candles I was mentioning just now. I'll just drop it somewhere in the center of this screen. So if you watched until the end, again, thank you so much. Enjoy the rest of your week and month. Good trading.